Alright, fellow meme stockholders, XMAX Trading here. Want to go over some Xela FUD from Investor Place, trying to get you out of the stock. You know, that's always a big red flag to me when, you know, certain financial media companies want you to get out. So, you have to go through this and click the subscribe channel if you haven't already. Hit the like button, helps out the algorithm. Keep producing content for you guys. Alright, let's get into it. Let's get into this FUD. No need to hop on the Xela bandwagon. Don't count on a repeat of the epic short squeeze Reddit rally and that Xela saw in July. So Xela is the ticker symbol, and I guess Xela is the actual official company name. By and large, meme stocks have moved lower last month, but Xela Technologies is the one that bucked the trend. Shares in the business process automation provider are no stranger to rallies, fueled by Reddit's Wall Street Bets community. Before the short-lived July run-up, it experienced a similar brief period off the charts enthusiasm back in mid-March. So it had a run-up in March and July, kind of similar to other Reddit stocks. We've seen trading around $3 per share, down from $4 per share was trading for only a few weeks back. Should you buy ahead of the next wave? Not so fast. According to them, yeah, sure. Sure, its performance last month, heavily compared to other heavy short meme stocks like Clover, which sold off during the same time frame, may make it seem like a short squeeze play that's yet to become played out. The time frame is different, but the story is the same, that it's Xela's meme squeeze moment has come and gone as well. I don't think so. I really disagree with that. This is an agenda piece. I don't know what the evidence is for. With dim chances of retail traders piling into it, don't expect a repeat of its epic run. Instead, as it gets revalued in its fundamentals, move back below $1.50 is more likely. I don't, because Reddit or retail owns like 86% of the stock. I don't believe what he's saying. Comparing its chance of repeating its July performance against the most likely outcome of similar plays, considers a stay away situation. Why is he saying that? Okay, another cast at play with Xela shares more below, but its main cast remains the possibility to experience an en masse buying by retail traders. We've already bought it up, looking to profit from what describes a meme squeeze trend. In other words, heavily short stocks have caught the eye of our Wall Street Bets. Nobody's on Wall Street Bets anymore. Downplaying the continued power of this factor may be a fool's errand. After all, the initial meme stock craze fizzled out in the spring. Who expected to quickly move the second wave it did 2 months back? Who would have expected it to move quickly? Yeah, see, they didn't know. They assumed it was over with, and they were wrong. This is not financial advice, just my opinion. But just because things repeat themselves doesn't mean the third time is going to be a charm. Why? Because more is pointing out the overall trend fading out rather than coming back. Why? Because the meme stocks are running out of new buyers. Yeah, whatever. As Forbes come in and broke it down, now the trend is losing momentum. The cohesion that led traders to not to sell will fade further. I don't think so. Yeah, Forbes saying that. In turn, expect those that once held with diamond hands to start scrambling to cash out before stocks fall back to their prices relative to their fundamentals. What does it mean for Xela? A price below where shares change hands today. And now they're saying there's a low margin business. A reevaluating of Xela technology based on the fundamentals may not seem like bad news. But as investors place in basic detail on July 9th, there are pros and cons when it comes to another catalyst, a turnaround of underlying business. A successful turnaround funded by secondary offerings of Xela stock could result in outside move higher for shares. This may be limited by the dilutive impact of secondary offerings. Of course, also turning itself around may be the case of years said than done. How so? In mid-July, Seeking Alpha Company laid out why a turnaround model does not have a chance of happening. Despite efforts to digitize the business model, this remains a low-margin, labor-intensive business. This curtails its ability to cut costs and improve profitability. Without progress of the turnaround, it's going to be hard for shares to hold steady, much less bounce up from here. This doesn't mean shares are heading to zero, but move back where it traded for the last meme stock under these more likely outcome. Why this is a stock to avoid? Sure, it's possible for Xela with a 23% short float to get meme squeeze again, but the way the trend is going, it's not something you can count on. Not financial advice, but this is definitely an agenda. Instead, expect shares could become more valuable than fundamentals going forward. Yes, in theory, this could result in a big payoff for investors diving into this penny stock today. It may be selling the story that's modernizing its business model. That's clearer in the offerings like DrySign, which is going to go out after a market dominated by a larger catalyst like Adobe. Like DrySign. For now, it's still mostly a low moat, labor-intensive business with limited ability to raise its margins. So with the merits of buying a short squeeze turnaround play dividend. What's the best move of Xela stock? Ahead of pulling back, consider a stock to avoid. These people. All right, till next time, guys. This is not financial advice. In my humble opinion, this is FUD. So, later.